Hello, what is a stock watch list and why do swing traders need one? For me, a stock watch list is a list of stocks that you create so that you can swing trade from. In my stock watch list might mean different things to different traders, but for me, it's a watch list that I create and I have for the whole year. So it will take you time to create that list, but once you create it, you have it for the whole year, and you just analyze those stocks chart, and when you see a stock that is well positioned for you to buy, you purchase. At the beginning, when I was creating this watch list, I think some swing traders, they do it for the week. But then very quickly, I noticed that I couldn't keep up renewing the watch list for the week, like a 12 stocks for the week or something like that. And sometimes I'll find so many good stocks to purchase. It was last year when I was swing trading using short option on swing trading strategy. I'll buy stocks and few days later I will sell for small profits. I will find stocks that are well positioned for me to buy because I'm pretty much buying a using on each side of the upswing. It was easy to get in and get out a few days, few weeks, but I noticed that sometimes I'll find a lot of good stocks for my weekly watch list, and like from my main list, I will find good one that are positioned to buy more than the number that I need to put on my weekly list. And that was one challenge that I noticed when a lot of stocks are good to purchase now, that things. And then another challenge that I noticed is I have a list of 300 stocks. Going through all of that every weekend to find stocks that are positioned well for me to buy, that are getting to the zone that I could, that during the week there will be a good probability to buy some of those. Sometimes during the weekend I just cannot go through 300. I cannot analyze 300 stocks. And that's when a little by little I decided to create a watch list of stocks that I know I can analyze within an hour. Even last year, because last year is when I started swing trading, learn about swing trading right at the end of 2023 toward the beginning of 2024, and start and swing trading in 2024. Before that, before 2024, I used a different strategy to trade and invest for many years up to 2024 when I swing traded. So I create my watch list, and those are lists that I analyze every day or so and purchase and sold from. But then in 2025, I like that option better. I did it again. I analyzed my 300 stock toward the end of the year to find about 80 or so to create my 2025 watch list. Some of the 2024 stocks made it 2025 and some of them didn't. So by trading them in 2024, I didn't feel like they are working well with the strategy that I was using, and therefore I took them out, and from my bigger list I pulled some from there to put in my 2025 and gave them a try as well. For instance, I put this note there that I want to take this out in my 2026 list. So those type of notes. But and then in 2025 I was able to analyze those on a daily basis, and some days, some weeks I can go some weeks without analyzing at all. But for me, a watch list is to get to create a list of a specific. If you want to combine market capitalization, that's fine. But as a beginner, to have a watch list of large cap stocks, because those don't fluctuate too quickly, you're not going to make a lot of money in a short period of time, and you're not going to lose money either. So it's a stable one that if you are busy, they do not fluctuate too quickly, that you can still catch the ride somewhere, in the getting the trade somewhere in it, without the the chart fly by you too fast. You'll be able to get on at some point, even if you didn't have the time to analyze it and you caught it weeks later. It might still be around the same area you will have wanted to buy in the first place. So it will be a good stock to begin with. It can depend on the strategy you are using too, but because of you are using long option and swing trading strategy, and we are swing trading growth stocks, large stocks are a stable one to work with, and later you can try different other capitalization as well, stock as well. But have a list of stocks that you can analyze within an hour, and you just analyze those every day if you can, to buy from, to sell after you purchase and you have profit in it. And the one that just didn't work well with your strategy, you can take them out and replace them with new one. But by analyzing the same stocks over and over and over, buy and sell, in my opinion, you'll get to know how those stocks price and chart behave. And if you want to take some risks with them, you'll know what kind of risk you are willing to take, whether to buy more share or buy a little early. You know those stocks, that they are stable enough. You'll be able to understand the chart, because it's all about understanding the chart. So I prefer to keep swing trading a stocks that I'm swing trading already, rather than starting anew with a stock that I have not traded yet. There are some stocks that I haven't traded yet in 2025, but they are in my watch list, and I've been analyzing the chart. I just have not found a good position to purchase yet, but I familiarized myself with those stocks chart for months now. So that is why I think it's good to have a watch list. Create your own collection of stocks that you want to swing trade, and swing trade from that list. Buy stocks from that list and sell those stocks after they are profitable, and just repeat the process. You don't need to go look online for a high stock that you need to buy today. You already have your list to buy from. Those are stocks you have experience with, and you can swing trade. And if you buy and the price drop, you are not going to lose sleep over it, because you know that they are not going bankrupt on you. And when it comes to stock investment and trading, your money is not insured by the government, like if you have your money in a saving account where it's growing at a snail pace. In stock investment and stock trade, your money is not insured. So if you lose your money, if a company bankrupt on you, you lose the money you use to purchase those shares of that stock. That's why I just prefer, stocks have bankrupt on us before, when we are trading penny stocks and we are trading with $100. Because penny stock, if you have only $100 to swing trade, you can buy a lot of shares of those penny stocks. But now that we are saving more and we are using more to swing trade, I do not buy penny stock. Even better, I prefer to buy stocks that are sold on New York Stock Exchange or NASDAQ stock exchange, stock market. And some of them are higher than $100. Some of them are lower than $100. The things is the one that are, when the price is high, a little fluctuation can mean a good dollar amount as well. So it's not like few cents dollar amount. It can be, well, a good dollar amount in difference as well. So I don't mind trading those. But when you start out, you can, within those same market capitalization, you can just keep the one that do not cost more than $100 a share to trade, and just go from there. And as you keep investing your paycheck in your account, you'll feel more confident buying a higher price stocks if you have them on your watch list and they are well positioned to go up. If that's just one share that you can afford to buy, you will buy and just have it in your account. And when it reach where you want to sell it, you will sell it with a good profit. So we on that note, let's go work on our watch list for 2026, because we are getting close to that, and together we wanted to see how we want to select stocks for 2026. And this is just a preliminary selection. We are the one that we want to create our watch list with. We are putting, a positive word there for it: good child or great child or okay type of notes. And the one that we are putting things that we don't want. If better, I can just even move those there so that I can leave them blank. That way I know that things that are blank, I'm not going to include them. So I can move those out of there as well. That we know that things that the one that are not blank, because we have filters, we can just filter the one that we want to create our watch list with. For 2026, I wanted to have a bigger list than just 1 hour, more than what I can analyze within an hour, because I do not want to analyze them on a daily basis during the week. I want to analyze it during the weekend and then select the one that I want to, keep an eye on during the week, to buy during the week. I can just flag them, and during the week I can just check those to see if I can buy. For instance, in this list, I have those that I make red are the one that are dropping. If we pick this one, for instance, PRO, you can see that it touched base with one of our support lines that we like to buy at. So we can even take this one and put it back on its original color, because that support line is just higher up to be a valid line. Once the stock leave a line that you wanted to buy at and went below it, you can assume those lines are support line for the upside wall of the mountain, not a valid line. So it's resting around this. So we mark a red on our watch list, so that if I don't have time to analyze all the stocks on the watch list at the end of the day or early in the morning, during the day that I will trade, or if I want to do some analysis before the markets open, the one that I mark red are the one that I know that they are around where I want to buy. Therefore, I'll just go to my list and analyze those. That's one. Second, if I'm going to analyze the whole list before the market open or after the market close, at noon, where I will buy stock or sell stocks, I will review this list. Anything that I mark red are the one that I'm going to reanalyze to see for that day if what I'm looking for, that green bar that I'm looking for to buy that day, if I have a green bar. If I have a red bar, then I won't buy it. So I have those stocks that I will mark red that I will quickly look at. So that is the same principle that I want to use in 2026, trying to see if I can have a bigger list of good stocks and just analyze them over the weekend, because during the week those stocks don't move around too much. So just do the analysis over the weekend and then highlight the one that I want to keep an eye on during the week to see if I want to buy or not. I will try that as well and see how that would work out. But and so that is with that in mind, that we are a little bit more flexible with our strategy here when it comes to create that list. So we are reviewing our 300 or so stocks again to see the one that we said no to at the end of 2024, that they are not going to be in 2025, how they fare in 2025, if we want to add them in 2026 or not. So to pick those stocks, to analyze them to see if you want to have them, we'll use maximum monthly chart. And that's where, when you have your dates on the x-axis from the past to the present, and you have your price from 0 to infinite on the y-axis, you look at your overall stocks and you can see that this is uptrending. So this is a yes for our watch list for 2026. We can take a look at it. We will notice that this is a higher peak compared to those, but then it went 2 years before it started making a higher one as well, and then it pulled back, okay, and did it here as well. But then it took quite a bit before 1 year or so, and then it made a new high here as well. We have those arrows there because since that we purchased it and sold it in 2024 or so. So let's trace some lines together here. So when we are tracing this again from the past going to the present, we are connecting our higher lows. But you see, those two, when I touch base with those two, it's just going to go higher up. Therefore, we can go with this one. It's still going to go across it, and we do not want that. So we are going to go with this one instead, and it's going to, those are going to go, it's going to go through those. Keep in mind that those valley lines are not just a small line the way they are. They could be a range area as well. So this and those could still be well within that range, but I just like to do lines here, and I'm connecting the two obvious one there. This one is just so higher up to touch base with it. So this will be the closest one, and we can easily try to adjust this one to move it down. That way it will touch base with those bottom of those candlestick and not going too much across this one, and still be not too far from this one as well. So when we are looking at it, I will say that this, for, you see, every single dotted line here is a year time frame. So that is quite a bit of many years, and is still resting on this line. So that is a very good stocks that is following an uptrend line, and we can select this line to be our buying line. When it touch base with that line and start going up from there, we want to buy. Even better, we might take some risk there by now waiting to see too many higher lows, 2 or 3. The chart doesn't have to change directions. Even within the same direction, 2 or 3 higher lows, we will buy, because this support line is a very good one. It has been on that one for some years. So this will be our line, and I think for 2026 we are using that line. Let me see if this one will be easier for you to see. Is it easier for you to see? It's kind of blended in, right? Okay, we will figure it out. Right now, let's use that one. That will be our line to buy at. This one could just be too low for that to pull back to. For this, I think this won't be going forward the valley line. This will be the valley line of the mountain, because the last time it touched base with this one was some years ago, and then it reverted to this one. So let's keep this one as our valley line. But again, there is a chance that it can come back to this low, but let's assume this one will be here. So this is going to be a good one. So the answer is good chart. So if we have a lot of them, we can put that one as a great chart. And then we have Walmart. Let's take a look at Walmart. WMT. It is in our watch list for 2025. Well, we have now purchased in 2025. We purchased in 2024 quite a bit. And I just feel like it's going so higher up that I just don't want to buy at this support line. I just feel like it's so steep here, and with all those arrows that we have on it, we may not see the things well. But I just feel like this is just so steep that we prefer this to be our buying line. The line we like to buy at when it start going up from there. We feel like this could be the valley line, and this could just be a support line for the upside wall of the mountain, and at some point it might pull back to this. We don't know, but it has been on that rise for 2 years now. Let's just keep observing it. I'm not taking this as the support line. Let's keep this one. So it pulled back to it and went up from there this year. But yeah, that's why in 2025 we have not found an entry point to it, because we don't want to buy it that high, just in case it's now the valley of the mountain. But this is, so we will keep it. So the next one is Costco. Costco is on our watch list for 2025, but I'm not sure we are able to buy in 2025. We purchased in 2024. Okay, so when we are looking at Costco, is uptrending as well, and we pick this line to be our valley line, and I think we are going to keep that. We have this one, just in case this one was too higher up, we think this one could be it, but I think this is just too, it is higher up. It's like 1 year, 2 year, 3 years. So I think that will just be a higher up. 3 years, I think we are going to keep this one. Is longer, we'll keep it as our valley line. It seems like this growth could just be a mountain that is growing, and at some point it's going to walk on the downside of that mountain. And if it does, do you see this one here? If it does, but it has been on that rise for some years now. I just feel like, if let's activate this line, and we will be able to extend it to that level. So it is a long line and is touching the I don't want that to be going through the candlestick bar too much, but this is going to be our value line. So we will see what it's going to do. I just feel like this is just higher up. It's a support line for the upside wall of the mountain, and this could just be the value line. So we are going to keep that, and that's why we have now really purchased in 2025, because it has not come down to that line. But yes, for 2026. So the next one is SYY. So SYY, I'm not a big fan of this, but yeah, it's uptrending. But did you see Costco? Yeah, type of chart. So looking at this, for instance, it seems to be flat here, and unless you are going to trade it using horizontal support line, it's going to be a no. A uptrend. You have uptrend line here, but then you have a horizontal line here. So therefore, it is a no. So it's not because it's a bad one to. It's just that it's not well suited for our uptrend line swing trading strategy. And we do not want to use multiple strategies to swing trade. We just want to find stocks that are comparable with the strategy we are using, because we are using uptrend lines as our buying, our entry point. We want to find stocks that are uptrending and respecting their uptrend lines, and this one is not respecting its uptrend line. It's not respecting it. Is doing an horizontal one here for some years now. It could be a good stock to trade. It may not just be a good one for our watch list and our strategy. KR. So KR is uptrending, and we have this support line that we like to buy at. We are going to keep that. We can try to trade some more. This will just be kind of horizontal one, and if we trace from there, it's going to go from here, and I think this could well be one as well. So therefore, I'm going to make this one purple. No, not purple, but green or teal. So this will be our line to buy, or this one could be a one as well. I will just keep an eye on it and see when it touch base with this. We might just expect more higher lows from it to see if it's going to continue going up from there, or if it's going to come back down here. So we are going to keep those out as our value lines and see. It didn't make it to our 2025 watch list, because you see, when it reached a peak here, it took those many years before it reached another peak again. Let's see. So 1 year, 2 year, 3 year, 4 years before it reach another peak. So if we purchase it, when it start going up from the value line, is it going to take 4 years before we sell it? Those are things you have to think about as well. So let's say that one is just one-time things. When it reach that peak here, and it reach another one in 2025, 2 years later. So it's just one that it takes more than 1 year to reach a peak that is higher than the previous cycle one, and that's something to keep in mind for it. So it's going to remain in it, but we could put a note there that reaches a new high after 2 years or so. That way we know what we are getting into if we add it to our watch list. So KC is the next one, and you can use a filter to just select stocks that reach the valley and reach the peak within a year and two. That way, when you purchase them and you are using the valley as your entry point and the peak as your exit point, you know that you can buy and sell within a year. That is another strategy within this strategy that you can use as well, if you want to rotate those well. But if you don't mind buying it at the valley and then sell it 3 years later, you'll have accumulated a good amount of profit in it as well, as you know, around that one side of the mountain, and sell it before it start going down. So we are pretty much trying to accumulate profits around the swing. If you are just investing, when you purchase, you are just investing, you are going to accumulate your value in the stocks, or your price, your investment is going to grow along the valley line. When you are swing trading, you are locking in those swings along the valley line. When it's making those mountains going up and coming down, you are buying and selling it before it goes back down again. Just keep in mind that you will be buying it each time around that valley line at a higher price than if you have stayed in the trade the whole time. But you'll have accumulated enough profit that might have offset that rise in price, and you still have some change. You are pretty much trying to make a cash flow from those investments instead of just buying it and keep it in your portfolio for decades before you sell it when you need that money. You are trying to cash flow those investment along the way by locking in those fluctuations instead of just letting your money grow steadily along the valley line. And that valley line is uptrending. You are going to be accumulating profit in there. But if that stock is a stock that make those mountains along the way, swing trading allows you to lock in those growth that it does at within each cycle of the price movement. You want to lock in those, you know, those swings, the upside of it. But because, for instance, if your money is growing around this, at some point the price went there, so you are just trying to lock in that difference into your account, and then you will buy it again somewhere there, which is some, you know, a little bit higher than what you have purchased here, but you have some profit here that you can work with, and so forth. That's pretty much how you can compare your investing to swing trading. So Casey, we picked this to be our buying point, but I think it's just too high. It can just well be supporting the upside wall of the mountain. Therefore, we can leave it and just keep this one as where we want to buy our valley line. I just don't know if it's going to come back down this low, because it has been on this rise for a while now, but I just think it's just too steep for this line to be our support line at the valley of the mountain. It could just be the support line supporting the upside of the mountain. When you are climbing, you want to have a support. You don't want to fall, right? Gravity is working here, and this support line is supporting those bricks so that it can continue climbing up. But at some point it might pull back down here. So we don't know if this is a valley line. I just think it's just too steep to be one. And with our strategy, long option and swing trading strategy, buying at the valley and selling at the peak, we just want to keep this one as our valley line. We can try to extend it a little bit to see which lows it can touch base with. It can touch base with this one, but I think that's pretty much it though. I'm not sure it can go all the way there. So this originated from somewhere here, and it touched base with it for 1, 2, 3, 4, 5 years, and now 1, 2, 3, it has not come back down to it yet. So whether this is going to be the new line or something between, we don't know. We just prefer to keep observing. But we just don't want to buy this support line and it will decide that no, that is just on its way up now and it wants to come down. We have some stocks that are in our portfolio and we are waiting for them to leave their valley and start going up and reach the peak before we sell. So they are negative in the account and we learn from it, and we want to be more cautious and trying to differentiate that support line supporting the upside wall of the mountain to the valley line, because those stocks, we like this one that have a steep growth. We like those uptrending stocks, but sometimes it's hard to know where the valley of the mountain is when it keeps shooting to the sky like that. So, but yeah, it's a yes for the list. It's a good one. ADM, but trying to get in is the challenge here and not getting too early. So ADM, well, it's not shooting to the sky for sure, but let's see what we want to do with this one here. Yeah, it seems to be respecting its uptrend line. So this is the valley. Clearly, it's easy for us to see the valley here. But here is my concern though. We have quite a bit of growth here that is now common. 2021 and 2, 2020, yeah. How is it going to be that? It has now really done that in the past, and this is higher. Each time it reaches a peak, it pull back, so it does not claim that peak long. So it reached this peak here, like from that support line. It took some years, 1, 2, 3, 4, 5, 6 years before it beat this peak, and then 1, 2, 3, 4, 5 years to beat this one. And well, it seems to be going up. So is it going to take 6 years to beat this one? I think there is a possibility of it, but again, it already left that support line. So are we going to wait 6 years for it to beat this one? And how many years it takes to come back down to this line, I have no idea. I think it does it shortly. Is tradable, but I'm not sure we want to add it to our list, and I'm not sure how to explain it, but I'll just explain it. I mean, if you want to be buying it every 6 years or 7 years, when you reach that peak and took a year to come back down and start going up from there, and you sell it 6 years later, and yeah. But again, I think we can do better with some stocks we have. So let's put something here for it that reaches a new high every 6 years or so. So because we use new high as our selling point, unless we change that strategy to find where we want to sell it, I think we just don't want to have it for 6 years and say that we are going to sell this in 6 years type of thing. So, and at this point, it left that area already, and that means we will need to wait 1, 2, 3 more years before it reach this 4 years before it come back down and start going up from there before we can buy it. So it seems like we may not even find an entry point in 2026 unless you want to buy at a higher price. But and this is on a monthly chart. We do not analyze chart on a monthly chart. Monthly chart is just for us to see the overall of the trend, to see our support line and our new highs, to see how the new highs are spaced out every year. Are we seeing growth that we can rely on to buy and sell for profit? I think it is a stock to invest in, not to swing trade with our strategy unless you don't mind the wait. So let's go to the next one. Unless you have a different strategy, you use a resistant line to sell, that's one way too. We do not want to change our strategy just here. We want to master the one we are using, fine tune it well, stretch it out, and later we can try other things if you want. But for now, let's find stocks that works for the strategy we have. So I'm trying to trace this, and okay, it seems to be respecting that support line, that uptrend line, and that is the valley line. So now if we are thinking about the new high, the last time it reached a new high was like 3 years ago, 2 years ago. And how is it even doing? So when it reached a new high here, it took 3 years before it reached it again. And then when it continued, but then when it pulled back about a year and a half to reach it again, and when it pulled back about a year to reach it again. But then from here we have not seen any new high every year after that, but we have seen a drop to the valley line. So when we pick this, it didn't take that long to reach the valley line here, but this time it took that long to reach it. And but it reached it here though, and when it went up, it didn't go that high either. It just kept making smaller and pull back again to start going up from there. So I don't know if it's trying to repeat this process here, touch base with it, pull back, touch base with it before it was really to go up. So I don't know, it is okay, it's just not something I'm quite I care much about. I'm seeing, I mean, I want to be seeing new highs almost every year. Does that make sense? It come back down to the valley line and go back down within a year or so, a year and a half. It touch base with the valley line and go back higher up and so forth. That is what I have in mind. And so I don't know. I think this one we can just put okay for it. So Hershey's, HSI. I like that company. I just don't know if I can swing through it. Okay, so I'm not sure what this arrow is doing here. It's just too remote to be left there. So let's choose some lines here. And you pretty much, when you are choosing your line, when you touch base, you just want to see which lows it can touch base with. And it touch base with this one, and probably with this one, but not much with those. Probably with this one, that is the closest as well. So this is a support line because and the valley line, because it originated from so far in the past. This will be a valley line, so we can tell the valley line and is respecting it. The problem now is the peak, but let's see, this peak is not in 2020, so that is okay, but it's so steep that we wonder if it can, how long it's going to take to surpass it. So when we are looking at the previous one, this one, it exceeded after 1, 2, 3, 4, 5, 6 years for a while, and then it pulled back to the line again. So when it started going up from there, it exceeded the previous one around here. So and the highest peak will be this one. So 3 years later, okay. So and then it went up, it pulled back, and from there quickly it climbed up, and now it pulled back and start going up from there as well. So we can give it a try and see if that is just one of those stocks that will reach a new high every 3 years. Knowing that, you just want to make sure you buy it low enough. Just leave it there and know that, well, you'll be selling it 3 years later. So swing trading and investing at the same time. So it's not going anywhere. It's Hershey's. Who doesn't eat chocolate? Right? So let's just say, I don't know, good. And we can put a note that reaches a new high every 3 years or so that we know that. So, but I think we can be okay with it. It was one of the reasons I wanted to take Procter and Gamble out of my watch list for 2026, having it in my watch list for 2025. But I think taking more a relaxed approach, I can still have those that once I purchase them, I know that, oh well, I might have to sell it 3 years later. Why not? Because now I'm seeing more of those. But again, when you are seeing those things like that, you might want to be more cautious and accept those stocks that you can believe in a little bit, like Hershey's. We know that company, so we see the product for it. There is one that I don't even know what company it is, and I'm not going to go dig about those company. I don't know if you know about them at all. So buying something that I had to sell 6 years later, I think it is 6 years too long to see if this company is going to be around. But it has been around since the 1980s, so maybe it's stable that it does not grow. I think that might be just those cases that we might notice some stocks that are, because we are trading large cap stocks, they are stable stocks that they are not growing fast like the way I'm talking about. I like those stocks that between the valley and the highest peak is within a year and a half. It could be more for those stocks that have growth to them compared to those stocks that are kind of stable, that they are growing slowly, like maybe that ADM or Hershey's or Procter and Gamble. So maybe you see the way we are analyzing those stocks and we are seeing those things, is kind of naturally intuitive that we are noticing those subtle things about those charts. It's just by observing those charts that, though little by little you immerse yourself with those knowledge. You'll notice that, oh, this company has been around since 1980, and it's now reaching a higher speed, because we are working with maximum monthly chart and maximum daily chart. Any high peak that is highlighted like a high and show the price is the all-time high, is all-time highest price. And those large cap that are stable, they are now reaching that high peak quickly, and when they reach it, they are now pulling back to the valley line quickly. Either they takes a while to reach up, they take a while to reach down as well. So those are things to think about, to see the strategy you are using, if you are willing to trade them, knowing that they will become somewhat a short-term investment in your portfolio, because they will be there for more than 1 year and a day. So when it comes to tax, you will be paying long-term. There will be like long-term, your profit will be like long-term capital gain, and therefore will be charged at a lower tax rate compared to your short-term capital gains that you purchased and sold within 1 year time frame. So you will pay a higher tax rate on those. especially when you are swing trading in your taxable brokerage account and not in your Roth. So those are things to take into consideration. Let's do one more, which is going to be GIS. So GIS is uptrending. Let's trade some valley land here and see if it's respecting. Wow, do you see that? Is respecting that line quite a bit. So, and that line is so long. Let's trace this one. This one will go closer, but frankly there is not much difference between the two. It's like $7 different. So therefore we are going to color this as our peak, our valley line to buy at. And whether it touch base with this one or not, they are close enough, but is respecting that line. Now let's analyzing the highest price. So this is before 2020, and this is what, 2023. So this peak and this peak has 1, 2, 3, 4, 5, 6 years time frame in it. So when it reached this highest peak, it took about 6 years before it exceeded it. So now is right at the valley line again, and when we purchase it, it could be about 6 years before we sell it. So we are going to leave it in it because again, I think it's general. Isn't that like that cereal company? Let's take a look at the name. Do you see how I'm saying trading stocks without even knowing the name of the companies? Yeah, I just want the money. So yeah, General Mills. So yeah, my kids eat cereal. I don't. I'm like I have lactose intolerant. So maybe that's why, I don't know, but I'm the one serving them. So GIS, and I think I purchased it before, or my husband purchased it before, and we sold it. So, but some years ago. So yeah, I think we are going to keep it, and right now is right where we want to buy it. So, and keeping it for FY26, let's keep an eye on that. So, but let's put a note there, and we have a good chart. We are going to add a good chart to it, and we are just going to put new high every 6 years. Respect a very long valley support line. So those are companies that they are so stable that they grow slowly and come back down and go back again. They take their time. Great for investment. Want to swing trade? Just put a dash short-term investment next sweat when you are trading those, because that's how long we are going to be in it based on the strategy we are using. Valley for entry, highest peak for exit. Thank you so much for your time. And again, we are not buying it exactly at the valley. In this case, we can though, because it has been respecting that valley line for so long. Nothing can go wrong, right? Yeah, let's hope so. And as for the peak, I think when it reaches it, okay, it can actually continue for a year or so. So when it reaches it again, we can decide to stay in it for half the time, and we can use some ratio as well. $90 here, and the lowest price it left here was 37. So we can just use a ratio and say 90 divided by 37 is 2.4. So if you purchase it when this cycle started here, if you purchase at 37 and it reached around 90 and you sold it, you'll have almost twice 2 2.4 times your money. So using that, you can say that, okay, if whatever, when it start going up from here, let's just say the lowest price is going to be 46. So we'll take 46 times 2.4 and we'll say, okay, so if we bought it at whatever price we purchase it, when it start going up from there, when it reach 110, we will sell it. It might reach 110 in 6 years. So those are, you know, our exit strategy. First, when that new highest peak is reached, then you can see if the previous one lasted. It lasts more than a year. So maybe we might say enough for half that time frame. And the third strategy is to quantify the exit by saying, well, we can say enough for half the time, or when you reach $110 a share, we get out of that. So those are our exit strategy. That's why we want to see those all-time high mark on the chart to guide us to see if frequently the stock reaches those highest peak, for us to count on it to get in at the valley line when it start going up and sell it before it reach the tallest peak and start going down. But when it's taking years to do that, you might want to take that into consideration. In 2024, I disqualified those stocks out of my 2025 watch list, but in 2026, I like to give them a try and add them to it, knowing that those are more like an investment than a swing trade for the time frame that I will be in it. Therefore, it's now a lot of stocks I will be doing that with, but stocks that I know Procter and Gamble, General Mills, Hershey's, and things like that. And I don't know if I come across Johnson and Johnson. I'm trying to count alphabet. Do you think we come across J before G? No, right? No, yeah. So we have not come across J yet. So maybe we have Johnson and Johnson in our list. If we do, we might come across it and we might see. But knowing that you have, that is how the chart is behaving, you can decide if you want to have those in your watch list or not. So thank you so much for watching our videos, and that is how I think it's important for swing traders to have their own watch list, to create them, and we are in the process of creating our 2026 watch list, and we want that watch list to be longer, that we might just analyze it during the weekend. And with our up to launching trading strategy, when we purchase stocks, it takes a while before we sell it, because again, you can see some stocks is taking years before they are reaching their peak, but we want one that can reach their peak within a year. But if it's taking about a year for you to sell the stock, it's good to have a bigger list, so that you know you can find, there is a bigger probability for you to find a stock to buy, rather than having the money and all your stocks, well, they are somewhere between the high and the low, and they are now where you want to buy them. But having a bigger list might give us more stocks available when we are able to save money to be able to find something to buy and let it be, while we are analyzing the rest to find which one is the next coming back to the valley line and start going up from there for us to buy. So that's why we want to have a bigger list for 2026 and just analyze it over the weekend, and to see the stocks that we want to buy during the week and highlight those, so that during the week we can just quickly, during a buying time, during the time that we will buy or sell stocks, we can just analyze them to see if we are seeing where we want to buy, or if it's now quite close there, maybe after the market close, we can analyze those few to see if it's right there. For instance, when we are looking at GIS, we can go to maximum daily chart and look at it closer, and you can see that it's right close to our line, but it's making lower lows. You can see the direction of the chart. It's making lower lows. I don't know if I can zoom in for us to see it, but you can see that this Friday the price drop. So this is lower than that, which is lower than this one, same as that one, about a little bit higher than this one, but lower than that one, lower than this one. Like this low is lower than this one, it's lower than this one. So you see, if you want to connect those obvious low, your line will be going downward. Like you will be tracing from up, but then you'll be going downward, going to where the price is right now. So it's still going down. We are not seeing uptrend yet. So that's a good thing, because then we can keep observing it to see when it start going up. We can buy after we see 2 or 3 higher lows there. We can buy some share, assuming it's done going down and it's getting ready to go up. So that is how we analyze, and that's how we make our exit, our entry decisions. So let's go. We can even see the last time it touched base with it. So we might have to zoom, and the reason why I'm going down here is when it touched base with it, you just want to see if it start going up from there, or if it went up and down touching base multiple times. But now it touched base with it and just start going up from there. So maybe when we just start seeing higher lows, even within the same direction going upward, we see higher lows, you can just buy at the first or second greenback that follow a high a pullback, and just get in there. But yeah, that's how you can compare the previous touch point to see if it remained there for a while or not. But and you just know, you are aware that once you purchase this, automatically is a swing trade, but it becomes an investment, because of when we want to exit could take some years. So thank you so much for watching our videos. We thank you very much for your time, and we thank you for your comments. Thank you very much for subscribing to our channel. I'm Afiavi, Liberman Liberman Consulting L.L.C YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. And that's why we are creating a watch list for 2026 and sharing those tips with you on how you can create your own and rely on it to do your swing trade during 2026, especially if you are using long option and swing trading strategy. You create your own watch list. It could be a bigger list, and if it's too much for you, you can analyze them again and pick the best chart that you like to create a shorter list and go from there. But you'll have your master list and your shorter list as well. Thank you so much. For more tips on how you can create your own watch list, will you please check the description of this video? We have our playlist there. Thank you so much for your time.